In this video, I'm going to discuss some of what happened with the interest rates throughout 2022 and into 2023. If you haven't watched my video all about interest rates and you aren't entirely sure what interest rates are and why they change, I would encourage you to go back and watch that video before watching this one. In my video, How Much Home Can I Afford?, we played around with a mortgage calculator to see how you can better determine your home budget based on monthly payments and some other factors. We also moved the interest rate around a little bit to see how that impacted home affordability. As we saw, low interest rates, of course, allow people to get more home for their money, and higher interest rates, less home. So, as interest rates have risen over the past year or so, it's clear why this has created so much concern over the housing market. So, why have they risen in this case? If you remember back to that video about the Fed and why and how they purposely influence interest rates, it's mainly to manage inflation in efforts to keep it about in the mid 2%. High inflation, of course, is one of the most dangerous economic factors, so managing it is of utmost importance to the Fed. After inflation dropped to almost zero in the early days of the pandemic, frankly, nobody wanted to raise prices in the middle of an international catastrophe, it began a steady rise. It reached its pre-pandemic point of about 2.5%, basically the ideal inflation rate, in May of 2021. But it didn't settle in there. It continued upward, reaching its recent peak at about 9.1% in June of 2022. Just for reference, this was the highest inflation in the United States since 1981, early 1982. Something had to be done. Pretty much everybody agreed about that. And unfortunately, bringing inflation down does come with some significant consequences. As the Fed Chairman Jerome Powell said back in August of 2022, the battle against high inflation would cause some pain to households and businesses, presumably through the interest rate increases and other economic issues that were soon to come. So how does the Fed influence interest rates? Remember, we talked about how they don't set interest rates specifically that we pay. Instead, one of their most common tools is the federal funds rate. This is the cost of those overnight loans to commercial lenders who depend on them to issue consumer loans. Taking a step back a couple of years, between February and April of 2020, the federal funds rate was slashed to almost nothing in efforts to keep the economy going during the worst part of the pandemic. Further, the rates would remain below 0.1% into February of 2022, despite the fact that inflation had already been on the rise and well above 5% since the summer of 2021. The fact is, after all that the nation had been through over the past couple of years, and the post-pandemic recovery still kind of in process, the Fed was very reluctant to raise rates as quickly as they might have otherwise. Nonetheless, over the past year, the Fed has increased that federal funds rate every single month, carrying an increase in that mortgage rate along with it. Now, of course, that's not the end of the story, and things are quickly evolving here in the spring of 2023. So in following videos, we'll take a look at the current mortgage rates and where they stand, where they might be going, and what you should do as a potential home buyer.